everybody, what's going on? Welcome to your weekend briefing for the week starting March 27th. We've got some interesting earnings this week. We are going to take a quick look at the macro, and we've got the Fed's favorite inflation gauge on deck for the end of the week. We'll be talking about this confusing market and see if we can figure out where things might be headed. We've got a lot of charts to look at to get a feel for the markets. We'll take a look at some of the setups that we've been playing and see how they're doing, see if we made any money or not. And we've even got a couple of new setups in stocks like DOCN and WDAY, plus maybe even some banks. So if you like these videos, make sure you smash that like button. We put a lot of work into the videos and it really helps us out. And if you're wondering who I am, my name is Kevin D. I'm a full-time trader. I've been doing this for a long time, and I am here to help you make sense of all this. So why do we do these videos every week? Well, it's to help our members make sense of the markets and keep them up to date on what's going on and to highlight fresh opportunities. We have a really cool community of like-minded traders, and members get to take part in live streams and live mentor sessions. So check out the link below and come join us. We'd really love to have you. All right, let's get right into this. But first, of course, a disclaimer: everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All trading and investment decisions are your own and done at your own risk. All right, so earnings Monday before the open. Carnival Cruise Lines. That should be kind of interesting. Those cruise lines are always quite interesting. And, they usually get some good movement out of them too. So worth taking a look at in the pre-market on Monday morning. BioNTech could also be interesting. Not really anything that gets me excited after the close. Maybe this gold royalty thing. This one right here, because gold has been doing so well, but that's about it really. Tuesday morning before the open, Walgreens. That's an important one. Maybe Futu. After the close on Tuesday, Lululemon. That one's always good for a movement. And Micron as well. Semiconductors have been hot lately, this could be good for a move. Dave & Buster's is another one that's usually good for a move. Don't really see anything that interests me on Wednesday before the open after the close. Restoration Hardware often makes a move, but that's about it. Thursday before the open, there's nothing. Thursday after the close, maybe Skills. Maybe BlackBerry, but not too exciting towards the end of the week. On Monday, we don't have any economic releases, but as we've got now, we've got the FOMC meeting is behind us and the rate announcement and everything. All these Fed heads can get out and start yapping again, and we know they love to yap. We know that they love to give their opinion on the market, and the market tends to hang on their every word and react to their every word. So now that their quiet period is over, we need to watch out for more Fed speak. They'll be coming. There's a few announced things coming through the week that'll be updating everybody in the newsletter and in the Discord about. And there's always some, unannounced things that these guys come out and say, appearances on CNBC or whatever that can move markets. So just be aware of this, as we for the next 4 weeks or so until the next quiet period starts a couple of weeks before the next FOMC meeting. On Tuesday, we have CB, Consumer Confidence Index. On Wednesday, we have pending home sales. On Thursday, final GDP for Q4. Now remember, this is the third print for GDP, so we shouldn't expect any really big changes out of this. If we did, then maybe that could move markets, but it would be a bit of a surprise. Unemployment claims is always on Thursday. And I put Yellen speaks. Yellen, usually when Yellen speaks, it's not that important, but she's been contradicting herself and presumably government policy lately. She contradicted Jay Powell at the end of his press conference, within minutes of the end of his press conference, She contradicted him last week with regards to ensuring all deposits. So it's, you know, who knows what she's going to say on Thursday. I think we need to sort of keep an eye on this because she's become a little bit of a loose cannon, I think. On Friday, we have Core PCE Price Index. This is the Fed's favorite inflation measurement. So very important. All eyes from the market will be watching this. This has a lot of potential to move the market if it's a bit of a surprise. All right. Let's take a look at the markets. And first, we'll start off with a little bit of discussion about why things are kind of confusing right now. But we'll be looking at our major indices, international markets, commodities, sectors, and some of the plays. So we'll get right into that. We will start with a weekly chart of the S&P 500. Now, the world's coming to an end, right? Or in a financial end anyway. You know, there's a major financial crisis going on. All the banks in the world are going to fail. Why is the S&P 500 going up? Another green candle this week. Closed higher than the week before. A little bit of a selling wick on that. But, you know, not looking too bad. And, you know, forming a little bit of a triangle here, tightening up inside a consolidation. And this would be, seeing as we're in an uptrend, this should be a continuation pattern, so we expect to see this break out to the upside of this. We do not expect to see this break to the downside and completely fall apart. I know a lot of people are calling for a test of these October lows, but that's not really what this weekly chart is telling us. You know, the same thing goes for the Qs. The NASDAQ is looking really quite healthy. Last week, we pointed out this bull flag here, sitting right on top of that downtrend line. And, you know, at the end of the week, it kind of broke out of that, and it's definitely continued to break out of that bull flag. Now, we've, you know, a little bit indecisive at that pivot high there. So still obviously have some work to do here. But this does not look like there is a major financial crisis going on. So this is why I said, you know, the markets are confused or seem confused. And I'm a little bit confused, to be really honest. And we'll see more of that sort of confusion come into play as we look at, as we get into the daily charts of these things. So let's do that right now, and you can see, well, we'll start with the Qs this time, but you can see we came right up to this pivot high, just tried to get through it and pulled back a little bit. We didn't pull back much. You know, we do have some selling wicks here. It's a little indecisive, but we're holding. We didn't fail completely here, and on Friday, we had a fairly nice looking candle there. There's a bit of a hammer there, and this looks to go higher. How about the S&P 500? You know, this had a choppy, indecisive week through the week. Still, you know, consolidating in here, but nice candle on Friday. Came down, tagged that old downtrend line that you can see it acted as support a number of times and reversed right off of that. And now I've drawn in a new nascent uptrend line here, and that does sort of make that triangle. But yeah, I mean, you can't dislike the look of this this candle on Friday, especially when you know everything that's going on, right? Let's take a look at IWM. And even IWM, the weakest of all these indices, really looked like, you know, for a while on Friday was going to give it up. Broke through important support. Well, you know, on Thursday it broke through support level. On Friday it broke through another really important support level and made us think that, hey, maybe this is going to go down and test these October lows. But it reversed strongly and closed almost right on the highs. Obviously still a lot of work to do here. We've got to get back up and through this downtrend line and get through some of these resistance levels. I think best case scenario is, you know, we come up and just start consolidating in here for a while and let things settle down and then move higher. All right, so why am I saying things look a little confused? Well, let's go over here. This is a heat map for the last month the performance of the stocks in the S&P 500. And you can see there's about 6 stocks that are really kind of holding this whole thing up. So, our indices are going higher because some of these stocks, Apple, Microsoft, Google, Meta, such a large proportion of these indexes that they are holding this up by themselves, and there is so much red here over the last month. So when we look at the charts of the indices, it's not really telling us the whole story, and we still need to be cautious. We need to see participation out of some of these smaller and mid-cap stocks. We need to see a lot more green on this than we have been seeing over the last month. Now, in the last week, we did. You can see this looks a lot better on a weekly basis, and we are starting to see some more participation. So, long story short here, let's go back to our chart of the Qs, because the Qs have been, really outperforming, and it's those FAANG stocks that have really been holding things up. I think we need to see, I think it's okay if we see weakness in the Qs as long as we see strength in IWM, in the small caps, in the medium caps, a broader participation across all stocks. And I think we saw hints of that on Friday. For instance, IWM was only up 0.37% on Friday. The SPY was up 0.66% on Friday, and IWM was up 0.9% on Friday. So we saw IWM leading, and that's not something we've seen, since this banking crisis started. So I think we need to see more of that, and if we do see more of that, then I think that we can actually start getting a little bullish on this market. But we still need to be cautious, obviously. But there are signs here that we're seeing this crisis come to an end, and that we could see the beginning of a bull market. You have to, or sorry, not a bull market, but at least a bull rally. And you have to remember that, there have been so much negative news has been thrown at this market, and it didn't completely fall apart. I'm really surprised we didn't see something like this, like we saw in December, or worse, even something like this. How do you have a banking crisis and you don't get something like this? It's really a little surprising, and that's why I've been able to remain bullish. Now, this has not been an easy market to trade, and I think it's still going to be a little choppy and difficult. So again, we need to be cautious, but there's reasons to be bullish moving forward. Now, let's take a look at the VIX. Nothing really scary here. We see that this has come down off of these highs. We're still hanging out above 20. That's fine, but we're well below these highs here now. TNX, the 10-year yield. Now we can see on Friday, this is interesting, especially considering the price action on Friday. But we see on Friday, we broke down through this important support level, but reversed and came right back up to it. Now we don't really want to see yields going higher. It would be nice to see these roll over. But over the last few days anyway, we can see that yields have been coming down. They have been buying bonds again, so that is quite interesting. Let's take a look at the dollar index. Now you can see the dollar index spent more than a week pulling back, which is really nice to see. However, on Thursday we had that nice looking hammer candle and a bit of a follow through on Friday. Seems like it's going to come up and test this important support resistance line right here, and hopefully that will act as resistance and this rolls over some more, because with the dollar index going down is definitely good for equities in the US and around the world. Let's take a look at our dollar cost averaging system and see where that's at. Now, 2 weeks ago, this had flashed or I guess 3 weeks ago, this had flashed a warning signal as we got kind of below the moving averages here. But the MACD never crossed down, so we didn't get that line that we get here as the MACD crosses down. You can see that the MACD is still sitting right on top of the signal line. But price is turning up, so we should expect to see that turn up now. And you can see we've got back to green on our dollar cost averaging, at least in the SPY. In the Qs, I don't think we ever went to red. No, we're still very much green here. Look at that nice bounce off of these moving averages. So nothing wrong there. IWM, though, still very much red. So if you're dollar cost averaging in the small caps or the small caps index, this is saying this is no-go for now. This has still a lot of work to do, and I don't think this can do this in 1 week unless it has a very strong week. So looks still like hands off on those small caps, at least according to the dollar cost averaging system. We're going to let price, tell us what to do for our shorter term trading. Let's go and look at global indices, ACWI, the All World Index. That had made a nice move up over the last 10 days or so. Had a little bit of a pullback here, but bounced right at that support level. Let's look at EFA, Europe, Far East, developed Far East, and Australia. Nice recovery here. Has retaken that support level. And now chopping around a little bit, and we should expect a little bit of choppiness with everything that's going on. Emerging markets, excluding China, same idea here, retaking support levels, a little bit of choppiness. And finally, FXI, Chinese large cap. And again, you can see that we had a nice turn. We came down, built a base right on top of this downtrend line, and turned back up. A little bit of indecisive choppiness going on right here, and again, not surprising considering what's going on around the world. Let's take a look at some commodities. We'll start with gold. Gold has been making a really strong move higher. It seems to be caught at this 2,000 resistance area, but we are, becoming in striking range to this all-time high level. That all-time high goes back to we almost tagged that last March. But this all-time high goes back to, I think this is post-COVID, August of 2020. That is just overhead. This does look like this wants to try and break through and go higher. But if the financial crisis is waning, does this and inflation is potentially waning, how much more can gold run here? So it's really interesting. I mean, this looks strong on the chart, but the macro is kind of saying, is kind of diverging with what we're seeing on the chart. The gold miners. Now these have been lagging well behind gold itself, but they are continuing to grind higher. I don't think much higher. I think they're going to find some serious resistance as they get up into this area here. Silver. Also, silver has been lagging gold. Looks kind of like the miners, right? And again, for silver, I think we're actually starting to see maybe a little bit of slowing momentum here. I definitely think it's going to have a really hard time. Unless gold is breaking out to new all-time highs, I think silver is going to have a hard time getting above this 2450-ish level. Copper, everybody's talking about recession. But copper is grinding higher nicely. Copper is not saying there's a recession coming. Or if it is, the recession is going to be minor. Let's move on to crude. This is just a choppy mess here. The Secretary of the Department of Energy, I think she is, came out this week and said that, even though the White House has been saying that they were going to be refilling the SPR below $72, with oil below $72, she was saying she doesn't see that happening this year. And in fact, that there is a release of 26 million barrels of oil scheduled for this coming week. So I don't know what to think about this. The White House continues to say that they plan to refill. And, I mean, she says no. There's a lot of contradiction. Have you noticed a lot of contradiction lately? I don't want to get political or anything. I'm just, but it's something that we should be aware of. A lot of contradiction lately within the executive branch, which is a little odd and concerning. So there you go. Oil choppy mess. There's no place in energy right now. This needs to decide one way or the other which way it's going. Gas, pretty much similar. But, maybe finding support down near these lows. XLE, the energy ETF, that is, finding support at a level. So are some of the other ETFs. I don't want to go through them all because really there's no plays yet. Unless maybe you're thinking of the short side, then you do probably want to look at some of these ETFs because there's potential for breakdowns there. TAN, chopping around doing a thing. Was this a false breakdown here below this important support level? Nearly closed the gap, came up. Is this a retest now? Or this is a retest, right? So what happens? Does it pass the test and it starts to move up from here? That's what you would expect, right? But it's solar's very choppy, as you can see, wide ranges. So, be careful if you're going to play in this space. Because the individual names can get extremely choppy and volatile. Let's take a look at all our major sectors now. Starting with the consumer discretionary. Just chopping around, looking a little bit weak. Industrials. Interesting bounce on Friday. Interesting reversal candle right off the 200-day moving average. Will that follow through? Will it come back up through the resistance or former support level here? Didn't support really on this move down all that much, but it was pretty decent support over here a couple of times. Will it get back up through there, maybe consolidate in there for a bit? XLF financials. This is, looking interesting, I think. I'm not, people who know me, I'm not much of a catching a falling knife kind of guy. But when we have a big decline like this, at some point you expect to see it get overdone and people to start coming back in. And when we see a major support level that has acted well, it comes right off this pivot from back in July of last year. Acted really well in here, and once we really pierced it, look at that one-day reversal there. What an amazing reversal candle after it did pierce that. So obviously prices below this level have been rejected, and we see on Friday we got down to that level and rejected this level and came back up, and they bought this hard, and we're just barely back inside, this consolidation here. In fact, I'm going to draw that as a base because I think this does become a base for us. But it can sort of give us an idea of maybe what's an upper. Whoops, that's not what I want. What is a potential? What is the potential upside here on a move higher, in case you want to play in this space? So we can see, where are we at now? 31. You could get a move to 32 fairly easily on this ETF, but there may be better opportunities out there. Let's look at KRE, the regional banking ETF. The scene of the crime here. And you can see that we did break down below. We had a couple of lows there. We broke down below that briefly on Friday and then moved higher. Now, we couldn't break above the high from Thursday. So, that would have been really, we would have had a bullish engulfing candle there, and then I would have had to go full on bull on these regional banks. But not quite there yet, but this is a very strong candle on Friday. So that is quite interesting. Another thing to note here is the RSI divergence that's going on. We can see that right here. Now look, on Thursday we made a much lower closing low than any of these closing lows. And look at that, RSI was much higher. We had intraday low here, and that RSI is up. So this is a nice looking divergence here, and this suggests move higher from here in these regional banks. Let's go to look at some of the big banks that made interesting moves on Friday. So this is JP Morgan, and I have highlighted the RSI divergence in this as well. You can see we're making a number of, a whole series of closing lows here, lower lows on the closes, and we've got higher lows in the RSI. We've got this nice hammer candle on Friday, right in this zone. We had a gap way back here in June of last year, and this is, kind of shown to be a bit of an important zone. And again, on Friday, now we've come right back up, and we're right on that 200-day moving average. So this is telling us it's rejected prices below this 200-day moving average and will now move higher. That is, I think, the most likely outcome from a candle like this, especially what we've seen in those other ETFs. And Goldman Sachs, very similar action here. A nice hammer candle on this one. A green one doesn't really have the volume, as much volume as we would have liked to have seen, but another one that you could look at. So if you're interested in playing in this space, you can either go with the regional banks, and I'm sure you know the names of those by now, where you want to look there, or also and maybe a play with less risk in it would be some of these bigger banks: Goldman Sachs, Morgan Stanley, JP Morgan, names like that, perhaps even Wells Fargo. Take a look at some of those charts as well. So yeah, I think this could be a really interesting week for banks. And one last thing on banks. I think a lot of what we've been seeing is, and especially the declines in the past week, after that initial bounce, we had more declines. I think a lot of funds are getting these banks out of their funds because we are coming into the month end, right? We have month end at the end of the week. And they have to report to, they make their big reports, and even the pension funds are reporting to their interested parties. And they could be clearing all of these banks out of their funds so that they're not there for their reports, right? A little bit of window dressing. And as we get towards the end of the week, I think we could see money flowing back into these banks, and then especially the week after. And it may have started on Friday. It may be starting a little earlier than we expect. So this could be really interesting. Another reason I think it's worth watching these. Now, the one caveat here is that I do not like banks in the very long term. These they move slow. They take a really long time to recover from these shocks. And if we look at a monthly of XLF, the financials ETF, look how long this took to recover from the financial, the 2007-8 financial crisis. So, it was, they made a high in 2007. They didn't get back to that high until 2018, and they couldn't get through it, right? They didn't get through that 2007 high until 2021. And look we're below it again. We're right at it, right? So these are not, to me, it's really tough to be in these long term unless you're playing for a nice dividend or something, because they do take so long to recover. So there you go. That's enough on financials right now. Let's move on to XLV, and we'll go back to a daily chart on this one. All right, XLV, interesting here. We had that breakthrough the down channel. We had a test of that channel line, and which it failed. Came down into some support here, and consolidating sideways under that line. Good day on Friday. Are we going to now try and come back up and through that, and try to stabilize and then move higher? I kind of think we will. So yeah, it might be worth watching this healthcare sector, and this sort of goes along again with my thesis that we need to see broader participation if this market is going to recover and be healthy, and this is one of the areas that I think that we could see some of that participation. because it has suffered so much. And if we go risk on, this will be a place to look. Biotechs, and especially biotechs. But these are looking quite weak. We've had a breakdown through this pivot here, through support level. These really need to get back up into this zone here and quickly. XLRE, REITs, all of the defensive sectors, and this is one of the confusing things that's going on right now. So we were seeing defensives, basically have a bad week, as we can see here in the REITs, and then had a really good day on Friday. The defensive sectors were all the leading sectors on Friday. Utilities, REITs, staples, all up there at the top of the outperformance list. So that a little confusing. And in the subsectors, strangely, banks and regional banks were the outperformers. So really kind of unusual price action going on Friday. Staples, they had a good move. Looks like they're wanting to break out of this channel. And again, as you know, we don't need to see the defensive sectors doing really well. Rather see some of the more risk-on sectors do well. Good recovery here from utilities. Let's move on to, speaking of riskier sectors, technology. This is looking pretty good, but again, as we mentioned earlier in the video, this is really the FAANGs that are, taking this higher, and we are definitely seeing slowing momentum in here. We're seeing some selling wicks. And I'm okay with that as long as we see some of these other sectors kind of take over, or at least some of the smaller cap stocks take over. Communications, and you can see this is losing momentum right up at that downtrend line. This downtrend line goes way back. It's not really the area we want to see this kind of fail and roll over. It would be nice to see this kind of break through here. And semiconductors. Now, semiconductors has been definitely been a leader through all of this, and but it is slowing. The momentum is slowing here. It tried to break out of this channel, kind of failing. So I'm not as thrilled about the semiconductor plays as I have been. I think we need to be really careful here if we're still in these. We'll look at a couple of those individual names in a few minutes. Let's take a look at Meta, though. We'll look at our FAANG stocks. Meta continuing to grind higher. Just a nice, slow, little steady grind. Don't see anything wrong there. Apple. Momentum slowed in this, but this is a nice candle on Friday. It is still above that resistance and breakout level, but it's kind of a tough play in here, because it basically stopped me out on this day here, because it's sort of in this market, I'm not going to let it pull back much. Pull back, I got out in around here, 160 and change. Because there's only so much I'll let it give it. I want to take profit out of these things, and it's been so choppy that I'm going to get out early if I have to. Amazon, this could be interesting. I like the way we've got, it's come up into resistance. We've got a little consolidation going on here. If you like Amazon and are looking to get in and we're waiting for a little bit of proof, or even you think you're bullish on this and you think this is going to go, because it is finding support at all these moving averages here and at that pivot right there. This could be a reasonably low risk entry and an early entry for the breakout. If you think that is going to break out of here next time it comes up, this candle right here could be giving you a low risk entry. You'd enter, tomorrow on a move above that candle with a stop below it, and that gets you through all those moves. Your stop would be below all of those moving averages as well. So if it gets below there, you're definitely wrong. So I'm not thrilled about this play myself, but I do like this risk reward potential on that candle. So that, that is a potential setup for some people. Netflix, another one of those confusing stocks. All right, so, and I think this maybe has something to do with TikTok, or at least the last couple of days. But, you know, I mean, Netflix was so weak when its peers were strong. It put in this bear flag, and then on Thursday it broke out strongly out of that. You know, so failed move on the bear flag, failed move comes fast moves. We've moved right up into the 50-day moving average, right up in this strong resistance level. So what happens next? I think the best thing for Netflix to do here is go sideways for a few days and then break out of this. It's already had a pretty strong move up here. I think it may have run out of steam on its way up there. You know, but if it can consolidate in here, you know, in this little triangle that's there, I think that could be good for Netflix. Let's take a look at Google. And this has come right up into a resistance level and is stalling out. So a little more, I think a few more sideways days in here for Google, and then we could be looking to play, you know, get a little more formation on this potential bull flag. And then this could maybe be worth a play. So I'll definitely be keeping an eye on that, see where that goes over the next few days. Microsoft. Same here. Look, I mean, big choppy mess. So it's hard to trust any play that comes out of this. And Tesla. Tesla is showing a little bit of weakness here. Inability to come out and make a new high so far on this sort of last leg up. But not super weak either, just more indecisive or perhaps building a base. You know, it built a nice base out here. Made a little bit of a leg higher, and that's fine. We can stair step on these bases, and that will be fine. You know, so let's kind of draw those in, right? We've got this base here, and now we've potentially got a base on a base right there. It would be nicer to see this set up in the top part of this for a breakout out of here and potentially above this old base here and through the 200-day moving average. So it just needs more time to set up, is what it's telling us, I think. All right, let's go look at some of the stocks that we're playing. HIMS is building a base. So, you know, we had that big move down, definitely washed out some weak hands in there. Stronger hands still in that. Nice move on a bounce where it really had to, basically the line in the sand, and it has been basing or flagging since then. It has a habit of making nice moves out of bases, and you can see this a number of times on this chart. So we would expect this base to break out of the upside of this. Now what I'd like to see here is, because, you know, we didn't have the greatest day or, you know, the greatest week in here, but we are still being supported by the 10-day moving average. That's good. I'd like to see it move up and do a couple of days at the top of this and then move higher. Now, if you're really bullish on this stock and you want to add back in some of your position maybe that you had sold, nice tight candle here for a nice tight risk reward, kind of like I talked about in was it NFLX? Anyway, I've forgotten, sorry. But yeah, you could try for the early entry on there if you're very aggressive. Or you can wait for a little breakout here if you want to add back in. I'm going to wait on this one, but I probably will add back to some of my position if there's a breakout here. AMD. So one of the semis that we've been playing, and not really liking the price action here. It's just gotten so choppy. It looks like it's kind of rolling over. Definitely it's lost its upward momentum. And, you know, kind of looking like SMH, the semiconductor ETF. NVDA is also looking like it has lost a bit of its momentum. However, this one, you know, definitely looking stronger than AMD. It's still above, you know, well above its trend line, well above all of its moving averages. And this could just be consolidating sideways, you know, building some more strength before it moves higher. But watch out for the rollover. If it starts cracking through some of these, you know, this trend line or these moving averages, support levels, it can start moving quite quickly to the downside. Let's take a look at Apple. Another one that totally lost momentum. I talked about this earlier, didn't I? That I got out of this because it was showing us it's completely lost momentum. All right, new setups. There's not a lot. I mean, there's a number of potential setups that need more time, that look indecisive, that could really go either way. So I've only got a couple of here, and I like this one because it's got that nice flat top, and that flat top is like right at the 200-day moving average, and it's got this series of higher lows here, and a nice 4-day base that it's built. So this one to me is a no-brainer. A breakout of here should be able to get some momentum, and you've got really tightly defined risk reward. You know, initially your risk is going to be below the low of the consolidation or below the low of the previous day. You know, if it broke out tomorrow, for instance, below that candle there. So initial stop on this around 34.75 in that area. And again, given the way the market is and its choppiness, you'll probably want to tighten that stop up, at least on part of the position, fairly quickly. But if we can get out, you know, if this can move fairly quickly and get out above this 38 level, I think we could see a really nice move in this, because there's not a lot of, not a ton of resistance. You know, there's going to be some at 40, obviously, but, you know, you get up into this 44. So that's a nice little move on this. This thing could run 10, 15, 20% fairly quickly. And the next one is Workday. Similar kind of looking pattern here. We had, you know, we consolidated, couldn't get out above that level, pulled back a fair bit, got to the 50-day moving average and got below it, but rejected anything below the 50-day moving average, pulled back up again, and consolidating now in the area of that resistance. That level is like 192.50. Had a nice bounce on Friday off of these moving averages, series of higher lows here. What I'd really like to see on this one is for us to spend a few days to even a week just getting tight up here under this resistance level and then break out. Doesn't always work that way. What do we do on Friday? Yeah, we didn't move so much on Friday that it would invalidate a move on Monday if we were to gap up and then break out of this level. That's still playable. I would just prefer to see a little bit of consolidation in here for at least a couple of days. So there you have it. That's the markets, and that's our setups. So what do we got coming up the rest of the week? We have another Ticker Talk session coming up on Wednesday. Those are always fun for members of the Discord. Go check it out in the description below if you think you might want to join us there and join our live sessions, our live mentoring sessions. And that's about it. That's all I got for you. If you've made it this far, thank you so much. Hit that like button, share, and subscribe. You guys are real heroes, and I hope you all have a wonderful week. Thank you.